Good morning. Welcome to Austin. I'm speaking to you from my home here in Austin, my beautiful home, and I am so glad to be here. I'm talking on my favorite subject, which is rice, and I'm glad you're here. In May of 2015, there was a horrible flood over in Wimberley, not far from here, and several people died in that flood. It was probably the worst flood in centuries in that area on the Blanco River. And it came after 4 years of dry, droughty weather here in Texas. The droughts continue in California, but it's ended here in Texas, which is a good thing. The bad thing is that my experts in climate and in meteorology tell me that this kind of thing could become more frequent as we move down the line. And that will have an impact on the rice market, which is what I spend my time thinking about. I would address you to the video on the website of the Outlook meeting in Little Rock, where I spoke and my economic consultant Stuart in California spoke. He has this wonderful website called cashrice.com, which if you're interested in rice, you should also take a look at. I want to talk to you a little bit about what it means to say the word rice. The book I wrote is When Rice Shakes the World. As rice changes, so does Asia. They're bedded together. Rice is not an insignificant commodity. It is actually a very interesting commodity, and it's very different than the other grains. It takes twice the water and twice the labor to grow rice. China, now becoming the biggest economy in the world, spends 70% of its irrigated water on rice and rice alone. The Great Wall of China is held together with, guess what? Sticky rice and burnt rice hulls. Did you know that? I didn't know that until 2005 when I was in China. If it were not true, I would have said it's true, because it is a symbol of what rice is. It holds society together. It's a military item as well as a consumptive item. The other thing about rice is that hundreds of millions of farmers grow rice for billions of people. As much as 3 billion people eat rice every day. In Indonesia, 30% of a person's income goes to buying rice. So the government watches it very closely. As a result, we have an interesting situation going on in the world today. Our prices are at maybe 50-year lows, and yet politicians and government officials across the planet want to become self-sufficient in rice. Go figure. There is a phrase that politicians, when they see the light at the end of the tunnel, try and build more tunnel. Being self-sufficient in rice is a worthy goal and one which gets you votes. But if you do not have the land and you do not have the water, you're going to have a problem being self-sufficient in rice. And that's the problem right now, is that they can't do it. In India and China, they spend tens of billions of dollars defending their rice policies, but they can't continue to do it. Right now, we have a stocks problem in Asia. Two stocks problems. One is that rice stocks are going down, which is long-term bullish on activity in rice. And the other is that the rice stocks are trying to find a home with existing demand, and that's why the prices are so low. The crude oil price is also down, and the dollar's going spastic. They say that in the stock market, the market gets off its medications. I don't know if you've heard that phrase before. Right now, the rice market is off its medications. The price is way below cost of production, and they're continuing to throw more money at the problem. The longer-term solutions are to redefine world rice trade. What has worked for 70 years in rice is about to become wrong. And that's the point of my book, that everything we've thought about rice for 70 years is wrong. And if you don't think about it in a new way, you're going to be left behind as this thing changes. I call the problem in the US as global warming. In California in the South, that's why we have the drought. In Asia, it's different. It's global swarming. And I don't mean that in a contemptuous sense. I mean that we have many, many people that are moving from the rural areas to the urban areas, and the populations are growing, and the price is low, and guess what's happening? Consumption of rice is way outstripping production, and stocks are going down in Asia. We have a low price here in this country because we have a temporary supply problem in the rice market that is going to resolve itself fairly soon because we've got a free market in rice in this country. So I would like to leave you then with a few weather thoughts, climate thoughts. I don't really subscribe to the idea of global change or climate change. I call it more climate strange. My advisors in weather tell me that we are moving from a warming period into a winter cooling period by 2017. Right now there's an El Nino in Asia that could cause some damage. It may turn out to be quite mild. El Ninos generally reduce the production of rice in Asia. And the other problem, however, is that if we get through the El Nino in 2015, we still face what is a global cooling problem by 2017, and Jack Frost could nip the recovery in grain production in the bud. These are just some of the problems that we think about every day at First Grain. I invite you to take me up on an offer. If you buy my book, I will send you the semi-annual report that will be produced this summer and let you take a look at that. And I would invite you to come back to the website from time to time as we update our thinking on the rice market. And I would leave you with one thought, particularly if you're a grower of rice, and that is that it is all about the cost of water and supplies. I want to give you a more elegant phrase for that, done by the Zen master, and that is, when you boil your rice, know that the water is your life. Have a rice day, my friend. Ready? Yep. As a price forecaster of rice, I like to tell people that the markets are like an individual. They can get off their medications at times. And when they get off their medications, value and price get separated. The price of IBM stock at 50 is the same company as at $150, $175. Something's happened to people's brains. And that's what's happened right now, is that the hedge funds around the world are all going short agricultural products because they're bearish on them, and they've got record short positions on because they've got a lot of muscle, and they push prices down to very low, below break-even levels. I like to think of the speculator today as a born-again deflationist. He was an inflationist for a long time, now he's a deflationist. Our work indicates that by the end of this year, the deflation argument is going to hold less water and prices will start moving higher. That's our bias. Right now, the price is low in Asia and in the US. It's low in the US because we have stocks that need to move out and we've got a limited demand. In Asia, the price is low because of the US dollar and because of crude oil, and people are confused. Actually, rice is not impacted by energy like the other grains. It's not a biofuel, it's a human fuel. It's disconnected for that reason, also because there are large subsidies in Asia for rice farmers, so they're kind of like separated. In fact, the low price of gasoline in Asia is probably one of the culprits increasing rice consumption beyond production. Because in Asia, so much of the household budget goes to rice. If your fuel costs are down, you can buy more food to feed people. In the West, there's not much propensity to eat more if the gasoline price goes down. So the market is off its medications. You'll get back onto its medications. We are at the lowest price in real terms in many decades for rice, and this too shall pass. And it will pass because stocks are plunging globally relative to demand, which is the only way to look at the rice price, and it's at the lowest price in maybe 50 years. So the long and short of it is that these markets are in a turning mode. And as they turn, things are going to change. But even if the price was not low or high or jack in the game, the rice market globally will not be in 5 years what it's been for the last 70. It will not be managed top down as it has been because the farmers are leaving the farm. And the ones that remain are going to get smartphones and technology and do their own thinking and their own marketing. That's the message of my book. It's not a nice thought, it's a necessary thought that the farmer become an intelligent businessman. The basic premise of our business at First Grain is that if you farm as a way of life, it's going to get expensive. But if you farm as a business, it can be a very rewarding way of life. The farmer is going to go from a feudal peasant to a businessman in the next 5 years. 3 billion people are going to get smartphones. Most of them are in agriculture in Asia, and they're leaving the farms. In China alone, massive change is happening. The size of the farm is being increased by the government, and that 250 million people in the next 5 years will leave the farm to enter the cities. Consider this for a moment. In this country, over a 50-year period, about 7 million African Americans left agriculture in the South and moved north into the industrialized cities. In that movement, it took 50 years to happen, and it was haphazard. This is being pre-planned by China, and it is massive, 15 to 20 million people a year leaving the farms, moving in the cities. Someone's still going to have to farm, and they're going to have to be high-tech, not feudal when they do it. You've got to get on board with this thought. If you don't, you'll miss what's about to happen in rice and agriculture. Let me tell you that in China alone, in southern China, Hunan province, the soils are so polluted with stuff like heavy metals, like cadmium, that the farmer will not eat what he grows, doesn't want to eat what he grows. I have never met an agricultural producer anywhere in the world that did not want to eat what he grew. But that is the case in China. In China, they lack a freedom, and that's the freedom to buy food. Not to have food, but to buy it from where they want. If China were to allow people to buy milk powder and rice and other materials wherever they wanted to, this world trade in agricultural products would be transformed. Right now, people are buying from the north of China rather than the south because there's a perception, rightly or wrongly, that the rice in the north is less polluted. Up to 50% of their water inside cities of China are polluted. 50% of their rivers are running dry. And they are also drawing water from the Himalaya mountains, which also feed about 2 billion people south of them with rivers. If they start diverting these rivers north, and already due to global warming, the glaciers are somewhat lower than they used to be, then we will see more and more difficulties of these countries relating to that project, which is China moving water north from the south. Because in the north, they've got the people and the agriculture, don't have the water. In the south, they've got the water, but they don't have as many people. So it is a natural thing to do, but it's a huge, massive project on a monumental scale that only China could undertake. India, on the other hand, farmers' sizes are getting smaller. If the farm continues to get smaller, the people will eventually get thinner. I say that with a heart because they need to change the way in which they operate their subsidy programs. They're subsidizing more and more people to eat, and farmers becoming very, very small. Farmers need to become modern. That's our proclivity here at First Grain. Another thing, China. China is the largest producer and consumer of rice, and they're very circumspect about their rice stocks and what they're doing in rice because it's a military secret, rice stocks are. But they are reaching out and touching the world as traders. They have bought into 2 large international trading houses, and they want to become more involved in the US. We are waiting to see whether the rice protocol will be approved and China can literally buy rice from the US or the Western Hemisphere. The Western Hemisphere is the only area of the world where China currently does not buy rice. Well, to some extent also India. Those are for different reasons. They buy rice from Pakistan, they buy rice from Burma overland, over the borders. They buy rice from Vietnam over the borders. They buy rice from Laos and Cambodia, and of course they buy rice from Thailand. They buy rice from all the major rice exporters except the Western Hemisphere. It's a little mysterious why it's taken them so long to approve the rice out of the Western Hemisphere. It has to do with insects and the government. The private businesses want to buy our rice because they trust our rice. They trust our water. If they had their way, they would be buying rice from areas that had trusted water, not areas that are laced with cadmium and other toxic metals. The two most important commodities in China are powdered milk and white rice. And the families are very concerned about the purity of that. So until China allows the Western Hemisphere to import rice, they are shortchanging themselves. But I think longer term, rice will move from the areas that have fewer people and more water to the areas that have more people and less water. And it's fairly simple. That means that someone's going to originate more and more rice from the Western Hemisphere, just as they've done with soybeans, just as they've done with corn. Rice comes across the border and no one's counting it. You can count every other crop and material that goes into China because it goes in through the ports. This comes overland through dues in Burma and overland in Vietnam. No one knows how much comes in and no one's keeping count. So rice is just a huge political issue in Asia, but China's already thrown in the towel. They are the largest importer by far, maybe somewhere between 4 and 6 million metric tons of rice in a market that's 41 million metric tons and growing. Our work indicates that as their self-sufficiency relaxes on rice, they will be importers of 10 to 15 million tons within 5 years. This is huge. This is inevitable. This is a permanent condition that will continue to accelerate over time. What you need to understand is that rice in the US is produced in California. It's a sticky rice. It goes mostly to Asia to be in sushi and on rice bowls in Asia, and American cuisine that is Japanese in origin, and that's called calrose, and that's basically what they grow in California. California faces east towards Asia. 90% of their exports are east towards Asia. And in the south, it's a long grain, which is a separate fluffy type rice that is sold and eaten in Latin America, Africa, and the Middle East. So one faces east, which is California, and the other faces south, and one faces west towards Asia, and the other faces south and east towards Europe and Africa and the Middle East. Two separate markets. 85–90% of all the rice trade in the world is long grain, but the medium grain market is growing quickly. The cuisine, the Japanese cuisine is growing in Latin America as well. In our office in Chico, California, we watch like a hawk the production of rice in Australia, Turkey, Russia, California, and other places that grow that type of rice, Egypt, and we produce a small report on that market. In the South, we watch the long grain markets, which are the major markets. The market in Chicago for futures rice is actually long grain rice, not medium grain California type rice. And the two markets march to a very different drummer. The price of long grain right now is almost half the price of California rice. They just are very different markets. There's a huge shortage of rice in California and a big oversupply of rice in the South. And that partly explains the price difference. And what we do is we put out daily alerts that are sent to our subscribers. You have access by phone, the ability to have conference calls with your staff, and special projects. We watch prices and data back years on the market. And for that reason, we also have regulators and related exchanges that take our service because of the data bank. And we hope to expand our website over time to be a more analytical tool for our customers. The bottom line is that we provide strategy for the buyer and the seller. About half our business is buyers, half is sellers. Sellers are farmers, generally speaking, and buyers buy rice and process it. So we have two different customer bases, but they relate to one another and they need one another. So we are not biased towards the farmer or towards the buyer of rice.